Welcome to Crumb Bum Millionaire, the show where you can be a crumb bum and a millionaire at the same time. So, today is my birthday. Well, not really. Well, it is in that it's my financial birthday. You see, it was May 5th of 2018 that I decided, you know what? I think I need to give up some of these crumb bum ways and take on some more of these millionaire lifestyles. My brother had actually sent me a referral link for an app that many of you guys have probably already heard of. If you haven't, it's an online brokerage called Robinhood, and it boasts 0 transaction fees. So no matter how many times you buy and sell a stock, you don't have to pay anything for it other than really what you pay in. Now there is like some weird stuff there with due to stock volatility or something, you have to have a little bit extra in there, but it generally saves you a lot more than some of those other companies, those other brokerages would give you. So the thing with that though is, I know in recent times, pretty much everybody's jumping on this 0 transaction fee bandwagon, or at least you'll get your first 150 transactions free or something along those lines. I'm just telling you the one that I was introduced to and the one that I stuck with. So it was 1 year ago, and I gotta tell you, the first stock I got from there, because it was one of those kind of, promotions where he sends a link and if I sign up, he gets a stock and I get a stock, and well, I got a really garbage stock. I got Chesapeake, and well, energy is pretty bad lately right now anyway. Chesapeake is really bad among the pretty bad sector. So, but the thing was, it was a stock that I could kind of play around with a little bit. Like, I made my first sell using that. I actually sold that stock. It was like $4 and I saw it going down, and my first stock ever. So I was just like, oh my goodness, it's going down. I gotta sell. So I sold it. It was like, it went down like 10 cents or something like that. It was like nothing. So, but I did slowly start adding to that over time. I kept adding a little bit and a little bit. I was like buying Ford. I was buying Coca-Cola. I was just kind of buying whatever I felt like at the time. I didn't really have a strategy. And that's kind of the biggest problem of all, is going into the stock market not having a strategy. Like, you should at least have some sort of strategy for like where to run, where everything burns down. But, I did that for about the entire summer. Until I got introduced to a market portfolio from the Motley Fool called the War on Cash. And well, it's kind of an odd name, but it does kind of make sense. So the War on Cash was kind of a market portfolio with a bunch of payment processing stocks in it. So your Visa is in there, you got Square, PayPal, MasterCard, Discover. And so I started buying some of those companies up. And well, that's been doing pretty good. And with payment processing really expanding out there with Apple Pay and some of these other apps out there, I do see a bright future for it. And it's probably still something I'm planning on investing more into. And I do kind of feel like I probably should have bought more into it when I had a chance. Not that I'm really, regretful of anything I bought. After I sold my entire portfolio, yes. So in the summer, when I realized I didn't have much of a strategy, I was like, you know what, I should just liquidate everything and just go into this with a plan, which I'm actually grateful that I did do. Otherwise, I would have been holding on to some of these stocks I didn't really understand the business. I didn't really understand what the real valuation would be of it. And that's a really bad spot to be in anyway, when you're buying stocks you don't understand. So, not long after that, I got introduced to Dave Ramsey, and I was like, hey, I'm gonna pay off all my debt. That's what my plan is. I'm gonna pay everything off. Well, and I was paying off a significant amount of debt, but the thing is, when you're putting $700, $800, $500 a month on debt, it doesn't leave a whole lot more for anything else. And I really didn't like the fact that I'm like this late in my life, and I was kind of putting everything on hold. And that's what Dave Ramsey advocates too, is putting everything on hold. And that's not the crumb bum way, you know what I mean? The crumb bum way is there's no compromising. You get it all, right? You win.
Wow, winning.
You make money, you're getting passive income, and you're paying off debt all at the same time. That's the crumb bum way. And so, when the stock market went on sale, or what we call like that massive correction that happened in November and December, I kind of got a little antsy. I was like, wow, we have Facebook for $133. Wow, we got Apple for $145, $150, somewhere around there. And I got kind of greedy. I was like, wow, people are panicking. I'm gonna do the Warren Buffett thing, right? I'm gonna be greedy when people are fearful. And so I started buying up, that money I was putting away for paying off debt. I just was like, forget it, right? I'm just gonna pay minimum stuff off here. I'm gonna put everything onto a no interest credit card balance, transfer it over, and I'm just gonna make money right now. That's what I'm gonna do. I'm gonna be generating money. And we'll go into more of that on a different video, I think. Because this one I kind of more just want to focus on my stock market journey, right? Which, that was pretty much it. At that point, I started buying up these companies when they're really cheap. And there's not a whole lot more to say about that. Now, those companies have all, as you already know, if you follow this at all, they've pretty much rebounded completely. And so I made a killing this year. Very successful year in the stock market. If by any measure, I feel like, I didn't 10x my money or double my money or something crazy like that, but really, that's a really unreliable way. And if you're doing that, congratulations, because you probably just won the lottery. Most people do not get those returns, and they never get it consistently, right? Like the stock market's kind of this place where you can, over time, accumulate a significant amount of wealth, but it's not something that this isn't Vegas, right? Or maybe it is.
Alright, so let's take a look here at my Robinhood portfolio. Currently my value here is $5,625. Now I have, what I actually put in, like paid into this though, was $4,754. So I'm up $875 right now, which is 18%. And honestly, so this is May 7th, I'm recording this right now. My birthday was officially May 5th, but I didn't have time to record this, so I was actually up about 21 or so percent. Well, let's see. What do I have this in? Well, I got it in Disney, Microsoft, Facebook, Visa, American Express, Apple. This is a gaming stock ETF. I'm bullish on video games and mobile gaming, those things like that in the long run. But I don't like buying individual companies of them because they just don't seem very stable. They don't seem like a good spot to put my money. And right here, this is a AI automated automation rather. And like robotics stock. I'm an ETF, so it's invested in a lot of different companies that would benefit from that. So there's like Nvidia in there, I think, and like Intel. The autonomous things like the Tesla's not in there, but what is it called? Like those iRobot little things, those Roombas. And then I have Tesla, which is my speculative stock. So, well, 18% is a pretty good number. I'm pretty happy about that. That's actually beating both of my, all three of my retirement portfolios. Or not stock. What made this portfolio successful? Well, I definitely think changing my strategy. It was around this time period here where I sold everything and then started buying companies that I kind of saw myself, you know what, this company is going to make money for me in 5 years. 5-10 years, this is going to be a good company. It's going to be worth more than it is today. And so that was like my Disney, Microsoft, Visa, I think maybe American Express was in there, and that was it at that time. And then, as the year went on and we started to see like a lot of stocks going down, like this is when Apple and Facebook and stuff like that starts going down, I was like buying these other companies here that always thought Apple and Facebook were good companies, but I started buying them when they fell down, because I was seeing like that the value was way higher, right? The reasons why they went down were not because of their business model, right? It was just because maybe there's bad publicity, or maybe like they had been characterized in a certain way. Like, let's quickly look at Facebook here, but I just kind of want to show you what I did here, and we'll take a look here at Apple as well. My average cost per share was $153. This stock is worth $189 right now. So every one of those shares basically made me about $36. Well, how did I do this? Well, I bought into weakness, basically. So I kind of did this is my first time trying to do that Warren Buffett kind of strategy of, you're greedy when, be fearful when people are greedy when people are fearful. So I started buying this at 165. Right, like I believe Facebook hit like somewhere around like 110 or something. Maybe it was 119 last year. I seem to remember that, and I thought it was like, it's just too much. I don't want to buy it at that price. And that's when some of this bad publicity was coming out, and this stock went down. And so it's like 165, and I started buying some of this. This is about the time when I liquidated my portfolio, actually. So I did buy some Facebook around that time period, and I bought it 165, and then it started going down, as you can see. Like over these period of weeks, it never reached 165, 155, and then it really went down 134, 135. But I kept buying it because I was like, wow, at 165, like this company, that's pretty good. That's this valuation's quite good. And as it kept going down, I just kept thinking about it as like, even though I was losing money at that point, I kept thinking about it as like, okay, look, you're not buying this stock though for it to make money next week, or for it to make money next month, or to make money in the next 6 months even, right? I was buying this long term, so like these short term, falls in the price, I was thinking as, wow, the stock's on sale, I'm gonna buy some more. I would buy some more. And then it started to rally back up again. It went up to 151, 167, and I bought my last one here right before earnings, because even at 179, I was like, this stock I can still make money on, so I want to buy it this one last time, because it might be the last time I could ever buy it at that valuation. That was a good call, because it put me up $431 overall on this one stock. Now this is my largest holding. It's about 40% of my portfolio. The other one I made out pretty big on using the same, strategy was Apple. So Apple's iPhones, they were showing, we're not going to sell as many iPhones. This stock got murdered. And I started buying this up because I always wanted to own Apple, but I always felt like it was too, over this past year, that it was too expensive. It's always been like up here. Right, and honestly, like if I could have gone back, I probably would have been buying it over here at 180. And then it just started going up. I think the stock reached like 130 or somewhere around, or 230. Yeah, there, 232, and then it just got like, it just sunk. But it was at this point where I was like, wow, man, Apple's really cheap. I want to start buying it. And so as you can see, the average I paid on this was 156. The stock's worth 202. I made $46 per share on this stock on average. And you're going to see the exact same kind of trend with this, right? So I first started buying this in December 10 at 164. And then these are basically the same price. But then look at this, right? Then December 27th, $153. January 4th, $144. Like, it's going down. And I'm still buying it, though. Because I'm like, oh, wow, Apple's on sale. Wow. The sales keep getting better. Right? It's like when you go to you're going to, like, buy your favorite sushi or something like that. And it's like, whoa. This sale's really good. And then you come in next week and it's like, whoa, I love this sushi. And it's even cheaper now. I'm just gonna buy more. And yeah, so all this, like, you know, I didn't realize that, you know, it didn't bottom out. I kept losing out. Like, some people are like, oh, I'm waiting for the bottom, I'm waiting for the bottom. I wouldn't wait for a bottom, right? If the valuation's good, just buy it, right? And it's about setting that time horizon, right? So like I said, I was buying this because I was believing in this money in this stock for years. So I didn't care about these valuations. I didn't care if I hit the rock bottom of it, because it was a good deal. And it really paid off. I mean, I made quite a bit of money from Apple by doing that. You know, where is it? $229 for just 5 shares. So, I don't know, that's kind of the big thing that I really learned there, was buying into weakness on companies I believed in, companies that I had a long-term investment horizon in, that I thought, you know what, this company I want to own for years. That really felt like a good thing to. It's not that it really felt like a good thing. I was scared a lot of times I was buying these things. I was like, goodness, man, am I going to lose more money on it? But the point was, when I bought the stock, I had a strategy, I had a plan, I had an investment horizon, and you know, I had an exit strategy as well. You know, like, there's always like a point where you're like, you're like, I'm going to cut my losses, or like, well, this is what I'm going to do if this happens, right? If this stock goes down another 5%, I'm going to buy some more, right? Like, you have a plan when you buy a stock. Like, I didn't have any of that stuff before, so I wasn't successful. But now it's just starting to turn out pretty good, you know. It's not like I'm Warren Buffett here or anything. But, I mean, 18% is pretty good for my first year.
And that's it for today's episode. I hope you liked it. Make sure you hit that like button, subscribe, and I'll see you on the next video.